Britain entered World War II already deeply in debt from the First War. The Second War would bankrupt the empire completely. By 1945, Britain's national debt had reached 270% of GDP. The empire had mortgaged its future to win the war. Entire cities were in ruins, the economy was shattered, and Britain owed massive debts to the United States. The war cost Britain approximately £7 billion, but the real cost was measured in what it destroyed. Britain's export markets were lost, its industries were damaged, its workforce was depleted, and its financial reserves were exhausted. The United States emerged from World War II as a creditor nation, lending to everyone, producing half the world's manufactured goods. Britain emerged as a debtor nation, owing billions, struggling to rebuild, no longer able to maintain its empire. This is the critical moment. Britain had won the war militarily, but it had lost economically. And in the modern world, economic power determines everything. The empire was broke. It couldn't afford to maintain colonies. It couldn't fund its military. It couldn't defend the pound's value. The foundation was crumbling. In July 1944, while World War II was still raging, representatives from 44 nations met at Bretton Woods, New Hampshire. Their goal: redesign the global financial system. Britain, represented by economist John Maynard Keynes, fought desperately to preserve the pound's status as a reserve currency. Keynes proposed a new international currency called the Bancor that would prevent any single nation from dominating. The United States, represented by Harry Dexter White, had other plans. America held 2/3 of the world's gold reserves. It was the only major economy not devastated by war. It had the leverage. The Bretton Woods Agreement established the US dollar, not the pound, as the world's primary reserve currency. The dollar would be backed by gold at $35 per ounce. Other currencies would peg to the dollar. The dollar replaced the pound at the center of global finance. This was the moment Britain lost its financial dominance, not through military defeat. Through economic exhaustion and American ascendance, Britain fought for exceptions, for special treatment, for time to adjust. But the reality was undeniable. The empire could no longer sustain the pound as a global reserve currency. It had the debt, but not the gold or the economy to back it anymore. For over 200 years, the pound had been the currency of global trade. That era ended at Bretton Woods in 1944, and with it ended Britain's ability to maintain its empire. What followed Bretton Woods was a slow, humiliating decline marked by repeated currency devaluations. 1947. The first crisis. Britain tried to make the pound convertible again, allowing it to be freely exchanged for other currencies. The experiment lasted 6 weeks. There was an immediate run on the pound as holders rushed to convert to dollars. Britain was forced to reimpose strict currency controls. The message was clear: the market didn't trust the pound anymore. 1949, first devaluation. Unable to maintain the pound's value, Britain devalued by 30%. Overnight, British savings lost nearly 1/3 of their international purchasing power. For British citizens who had spent lifetimes building savings, this was a quiet catastrophe. The government that promised stability had destroyed 1/3 of their wealth with a policy decision, 1950s to 60s, the slow bleed. Throughout the 1950s and 60s, Britain struggled with a recurring cycle. Economic growth would begin, imports would rise, the pound would weaken, the government would raise interest rates to defend the currency, growth would stop. Repeat. The empire was disintegrating. India gained independence in 1947. The jewel in the crown was gone. Throughout the 1950s and 60s, colony after colony broke away. Not because they were conquered by outside forces, but because Britain could no longer afford to maintain them. 1967 second devaluation. Prime Minister Harold Wilson devalued the pound again, this time by 14%. In a televised address, he infamously claimed the pound in your pocket hadn't been devalued, but it had. British purchasing power abroad had fallen, international trust in Britain had fallen further. Each devaluation was supposed to be the last. Each time, the government promised it would stabilise the currency and restore confidence. Each time, they were wrong. By the 1970s, Britain was in crisis. Inflation hit 25%. The government was running massive deficits. Industrial strikes paralysed the economy, the sick man of Europe, they called it. The pound, which had once been the world's reserve currency, was now a symbol of national decline. In 1976, the British government went begging to the International Monetary Fund for a bailout. Think about what that means. The empire that had ruled a quarter of the world, that had been the global financial centre for 200 years, was now asking for emergency loans with conditions attached. The IMF bailout came with requirements, spending cuts, tax increases, austerity measures Britain had to accept outside oversight of its economic policy. For a nation that had once dictated terms to the world, this was humiliation. The 1970s proved that Britain had fallen from first-tier power to second-tier. The empire was gone, the currency was weak, the economy was struggling, and there was no path back to dominance. From ruling a quarter of the earth in 1920 to IMF bailout in 1976, 56 years. But the real collapse happened faster. From 1945 to 1976, just 31 years. One generation watched the British Empire dissolve. Now let's talk about the United States, because the parallels are so precise it's like watching a script repeat Britain in 1920. Dominant empire, quarter of the world under control, global reserve currency, sun never sets. United States in 2000. Dominant empire, nearly 800 military bases in over 70 countries, global reserve currency, sole superpower. Britain, 1914 to 1918. World War I debt explodes, forced off gold standard temporarily. United States 2001 to 2021. War on terror, Iraq, Afghanistan. Over $8 trillion spent. Debt explodes from $5 trillion to $36 trillion. Britain, 1939 to 1945. World War II debt reaches 270% of GDP. Empire bankrupted. United States, 2020 to 2025. COVID response, $6 trillion printed. Debt reaches 125% of GDP and rising. Britain, 1944. Bretton Woods loses reserve currency status to dollar. United States 2020s, de-dollarization, accelerating, BRICS building alternatives, reserve status falling from 70% to 58%. Britain 1947 to 1967. Multiple devaluations, repeated currency crises. United States 1971 to present. Left gold standard, multiple inflation crises, dollar losing purchasing power. Britain 1976. IMF bailout, national humiliation. United States 2000 and something. This is the question we're living through. The pattern is identical. Military overextension funded by debt wars that drain resources, currency debasement through money printing, loss of reserve currency status, economic decline. Britain took about 30 years from peak to crisis. The United States has been following the same path for 25 years since 2000. The timeline is compressed because modern financial systems move faster, but the fundamentals are the same. You cannot maintain global empire through debt. You cannot print your way to prosperity. And once you lose reserve currency status, the decline accelerates. So what actually happens when a currency loses reserve status? And what protects wealth through that transition? Britain's experience teaches clear lessons. First, devaluation destroys savings denominated in the declining currency. British citizens who held pounds and pound-denominated bonds watched their international purchasing power collapse by 50 to 60% over 2 decades. If you held sterling, you got poorer. even if the nominal numbers didn't change. Second, real assets maintained value better than currency land, productive businesses, commodities. These retained more purchasing power than cash or bonds. The wealthy who owned tangible assets weathered the storm better than middle-class savers holding currency. Third, diversification across currencies and jurisdictions became critical. Those who held dollars, Swiss francs, or gold preserved wealth better than those who believed Britain's promises about the pound. Fourth, skills and productivity mattered more than financial assets. The ability to create value through labor, expertise, entrepreneurship couldn't be devalued by government policy. Human capital outlasted financial capital. Fifth, the transition was painful but not apocalyptic. Britain didn't disappear. It adjusted to being a smaller, less influential power. Life continued, but standards of living stagnated, global influence faded, and the swagger of empire gave way to the humility of decline. This is what reserve currency loss looks like. Not instant collapse, but generational decline. Not apocalypse, but the slow grinding down of living standards and global power. Britain didn't lose its empire to military conquest. It lost it to debt and currency collapse. 2 world wars bankrupted the nation. The pound, once backed by gold and trusted globally, was repeatedly devalued until it became a symbol of decline rather than strength. At Bretton Woods in 1944, Britain lost reserve currency status to the United States. From that moment, the empire's fate was sealed. Without the ability to print the world's reserve currency, Britain couldn't fund its military, couldn't maintain colonies, couldn't project power. Within 30 years, a single generation, Britain went from ruling a quarter of the earth to begging the IMF for a bailout. The pattern was military overextension, war debt, currency debasement, loss of reserve status, devaluation, economic decline, imperial collapse. And the United States is following that exact pattern. The dollar's reserve status is declining, from 70% of global reserves in 2000 to 58% today, and falling. The BRICS nations are building alternatives. Central banks worldwide are diversifying away from dollars. Military overextension, 800 bases, endless wars, $800 billion annual defense budget funded by debt currency debasement, left gold in 1971, printed $6 trillion since 2020. War debt, $8 trillion on war on terror, $36 trillion total national debt. The pattern doesn't care about American exceptionalism. It doesn't care about military technology or economic sophistication. The pattern is economic, and economic laws are absolute. Britain proved that even the greatest empire can fall within a generation when its currency fails. The United States is proving it again. If this gave you a new perspective, subscribe. History has the answers. I'll show you where to look.